unit budget. So unit budget is what? It is basically the statement of a financial position. It is basically related to some future period, and it is a financial statement which basically tells us that what would be the expenditure and what would be our revenue resources. From which resources we will be getting the money, and further it's a complete outlay that is basically telling that from where we'll be outsourcing our revenues and where we are going to spend those revenues. Okay, so that is related to revenues, and expenditure basically forms what? These form the unit budget itself. Okay, so it is the statement of estimated receipts and expenditure. So what would be the estimated receipts over there, what would be the estimated expenditure over there? So that is related to it. And further, this is for the coming financial year, this is for the future time period and for the coming financial year. So it sets out a exact criteria, or we can say a exact layout is over there. That is what is government is proposing so as to invest, or government is proposing to invest or further expand on the different sectors over there, and from what different sector or what different avenues the government is going to have the revenues. Okay, so we are having the components like receipt budget and the expenditure budget. So receipt budget is related to details on tax, non-tax revenue, that what would be the tax revenue, what would be the non-tax revenue, and what would be the capital receipts. So now you must be confused related to that what is the tax income, what is the non-tax income, and the capital receipt. We will be covering each and everything in detail, so do not worry about that. So I'm just telling you that when the government proposes some future outlay related to that what would be the revenue resources and how the government is basically supposing to spend those, okay, in the coming financial year, that is related to what? That is related to the union budget itself. And when we talk about the receipt budget, we are basically concerned only and only about the revenues, and further it is related to the tax revenues or non-tax revenues, or it may also be considering the capital revenues. Whenever I say capital expenditure, or I say the revenues over there, we will say revenues over there. In that particular case, revenue receipt is related to what? Revenue receipt is related to those receipts which we are going to receive in year, we are going to receive in a year. That is related to revenue receipt. And further, the receipts basically which are not related to the revenue assets, that you have not received the income from those assets which were going to be matured in coming 1 year, that is basically related to what? That is related to the capital receipts. Okay, and for the expenditure budget, it is related to what? Expenditure budget is basically details revenue and the capital expenditure. So even if there is a revenue expenditure, so as for the normal working of the government itself. What do you mean by revenue itself? Actually, when we say it is related to revenue, it means so as to keep the government running. We need to do some expenses. It may be related to that we need to spend on hospitals, on education purposes, on maintenance of the government departments. That is basically related to what? That is related to the revenue expenditure. And when I say capital expenditure, it may be related to that the government is to acquire some institutions or some assets over there. So whatsoever the amount is spent for those particular purpose, it is related to capital expenditure. Okay, so now let's have a look at the different important terms. So first of all, it is related to revenue receipts. So receipts in form of direct and indirect taxes. Receipt in the form of direct or indirect taxes. So whether you have basically it is related to direct tax or it is related to indirect tax, it is related to revenue receipt. Now what is direct tax? What is direct tax? So whatsoever the tax that is basically directly imposed on the customer itself, or based or imposed on the citizen itself. That is what? That is the direct tax. And when the tax is not imposed on you, but it is imposed on the goods or services that you hire or you purchase, that is related to what? That is related to indirect tax. So if you are basically paying income tax on the income you earned, that is the direct tax. And when you basically paying the amount for the goods you purchased, there is also tax inclusive in the cost itself. That is what? That is basically indirect tax. That is basically the indirect tax. Other than that, it may be the case that the government is receiving the interest. It may be the case that the government has lent the money to the state governments, or the government has lent the money to some overseas governments over there. In that case, the government will also be earning the interest. So that is also a revenue receipt. And further, it may be the case that the government has invested into different companies. Likewise, if we say if the government has invested into the LIC or related to the other undertakings, in that particular case, the government may also be earning the dividend upon it. on equity, the government is also earning the dividend and also the profits from the other investments, or it may be the fees or another receipts which are basically generated by rendering the different services. So those all are related to what? Those all are related to the revenue receipts. Okay. And what do you mean by the capital receipts? So if you are raising the loan from the market itself, let us take the case that the government has raised the loan from the market itself, or government has borrowed the amounts from the Reserve Bank of India, or any external assistance has been provided by foreign government itself. So you are receiving an amount. That amount is to be repaid. That is another case, but that amount is received for a longer period now. So that is basically related to what? That is related to the capital receipt itself. Okay. Further, it is related to revenue expenditure. So expenses incurred on the normal running of the government department. So as to run the government departments from day to day basis, you also need to spend on those departments. It may be the case that you are to pay the interest. It may be the case that you need to pay the interest on debt and subsidies. So if when you are paying the interest for the short borrowings, that is basically related to revenue expenditures, and when you are basically paying the interest for the long term borrowings, that is basically related to capital expenditure, isn't it? And further, capital expenditure, it is expenditure incurred on acquisition of assets and investments, loan advances to the state government itself. So that is what? That is your capital expenditure. So that is related to what? That is related to revenue receipts and capital receipts, revenue expenditure and the capital expenditure itself. I hope that you must be clear with all these four terms, isn't it? So kindly please do confirm at the earliest so that we could proceed. Okay, next it is related to plan expenditure. What do you mean by plan expenditure? So the different programs or schemes are formulated by the different ministries under the 5-year plan. So you know the agenda related to the government itself. So it basically works in 5-year planning. It works on the basis of the 5-year planning. So what different schemes and different programs are formulated by the different ministries, and for the outlay of that particular expenses, outlay of those related expenses is called what? Those are termed as planned expenditure, because there is a particular plan that you need to basically your projections would be based upon that, and you will be spending based upon that. So that is your expenditure is said to be what? Your expenditure is said to be planned expenditure. Is it clear? Further, it is related to non-planned expenditure, where you are spending but it is not under the 5-year plan. That is called what? That is called the non-planned expenditure. Now let us have a look at the receipt sides and the expenditure side. First of all, we will be looking at the receipt side. Now these particular terms are important. Different segmentations are important, because you must know that what different parts are covered under what different types. Okay, so we'll be covering those, and these will really help you out so as to solve the case studies. So first of all, it is related to receipt sides, that is the revenue receipts. So revenue receipts are related to what? Those receipts, either these are related to direct taxes, or these are related to the non-tax revenues. So either these are related to tax revenues or non-tax revenues. So we will be looking at the tax revenues first of all. So let us have a look at the gross tax revenue, that is the aggregate of all the taxes. So first of all, it is related to corporation tax, whatever the taxes being paid by the corporates, income tax that is paid by the individuals, companies, HUF, that is on the income so earned, and further it is related to other taxes and duties which are not otherwise specified, which that will be covered over here. Then it is related to customs. So whensoever the taxes to be paid on imports, export, or it may be related to the boundaries, whenever the goods are being exported to some other state or related to it, then that case the custom tax is basically imposed. And for the union excise duties, it is related to tax on production, service tax that you such as the GST etc., VAT etc., that is basically the service tax. Taxes of the union territories means the taxes which is basically paid by the union territory itself. That is a taxes which are paid by the union territories itself, that is the UTs. Okay, so that is basically what? That is your gross tax revenue. So these are basically 7 type of taxes over there. You need to remember the names exactly: corporation tax, income tax, other taxes, customs, union excise duties, service tax, and taxes of the union territories. Okay, and for the net tax revenue, there is a term called net tax revenue. What it is? Actually, whatsoever the tax which is received by the central government itself, let us take the case of the central government itself. Whatsoever the tax is basically received by the central government itself, that is basically a particular fund is formed out of it. So whatsoever the total tax is received, it is called the gross tax revenue. It is called the gross tax revenue. I'm writing it as in the short form, the shorthand, that is a GTR. And for the out of this GTR, that is a gross tax revenue, the amount as such, the NCCD that is transferred to the National Calamity Contingency Duty. Okay, so it is basically related to what? It is related to National Calamity Contingency Duty. So it's a fund which is created out of these taxes so received, which can be utilized in the case of the calamities or in the case of the exigency. Okay, so that is basically to be subtracted, and further whatsoever the share that is to be paid to the state government itself, because government needs what? Government needs the revenue, whether it is a state government or the central government, they need the revenue says to run the government itself. Okay, so as for the working itself. Okay, but now in this particular case, central government is receiving the taxes, and further a share of it, it may be the case that the share is to be paid to the different states over there. So that particular share will be subtracted, and also the NCCD will be subtracted. So these two components will be subtracted from the GTR. These two components will be subtracted from the GTR, and that will be basically net tax revenue to the government. That will be the net tax revenue to the government. Okay, so gross tax revenue that was earned, and further subtracting the NCCD, that is the National Calamity Contingency Fund, NCCF, or which we say NCCD, that is a National Calamity Contingency Duty, and further the state's share that is to be subtracted, and that will be the net tax revenue. Okay, after that it is related to the non-tax revenue. Other than the tax income, also government is earning something, that is basically the non-tax revenue. It may be the interest receipts. So whatsoever the amount which is lent by the government itself, it may be the case that the government is earning interest on it. So that will be basically interest receipt. That is also covered under what? That is also covered under the revenue receipts. And for the dividends and profits, so if the government has invested into some companies, or the government has invested into some instruments or some instruments over there, in that particular case, the government will be earning the profits or dividend over it. So that is also covered under what? Also covered under the non-tax revenue. That is also covered under the non-tax revenue. It may also be the case that the external grants have been given, or it may be the case other non-tax revenue must be there, or it may be the case receipts of union territories. Receipts of union territories, that is also covered under the non-tax revenue. That is also covered under the non-tax revenue. So the total revenue receipt, it is equal to net tax revenue plus the total non-tax revenue, that is your total revenue receipt. That is basically your total revenue receipt. It is sum total of net tax revenue and plus the total non-tax revenue. Okay, so that is your total revenue receipt. And further it is related to the capital receipts. So either it will be in the form of the debt receipt, or it will be in the form of the non-debt receipt. When we talk about the non-debt receipt, it will be covering all the different dimensions which are not related to loans, and advances. So let us take the case that if you have received the recoveries of loans and advances, but I already told you that in this particular case, recovery of the short-term borrowings will not be considered. Because we have already considered it under the non-tax revenue under the revenue receipts. Is that clear? Further, if it is related to miscellaneous capital receipts, that will also be covered over there. Then it is related to the debt receipts. So it may be the case that the government has borrowed from the market, or from the short-term borrowings may be there. It may be the case that the government has borrowed the external assistance may be there, or it may be the case securities issued against the small savings or state provident funds may be there. Other receipts can be there. So it is all related to what? That is all related to the debt receipts. We have mentioned at the rate over here, that is basically signing to over here, that is related to excluding the recovery from the short-term loans and advances from the state itself. Okay, in this particular case, the recovery from short-term loans and advances, that is to be excluded. Is that clear? Is that particular part clear over here? So we can say the total receipts are equal to what? Total receipts are equal to total revenue receipts plus the total capital receipts, and plus the drawdown of cash balance, that will be taken as such. The drawdown of cash balance will be taken as such. Now, what is drawdown of cash balance? It is not that much important from the syllabus point of view and from the exam point of view, but you must have an idea related to it. but you must have an idea related to it, that what is a drawdown of cash balance. So let us take the case that a security was worth rupees 75, but now due to the market yield it is worth rupees 100 rupees over here. It is worth rupees 100 over here. Now the 25 difference is what? This is the drawdown cash balance. This is the drawdown balance, or we can simply say the drawdown cash balance. So if the Reserve Bank of India has provided the assistance based upon, or the Reserve Bank of India has basically invested in the secondary market into the treasury bills or the government rated securities, now if the prices are higher, in that case it would be basically what? It would be the drawdown cash balance. Okay, so that is to be taken as such. That is to be taken as such. It will not be covered into the revenue receipts. It will not be covered into the capital receipts. It will be taken as such. So the total receipts will be sum total of three terms. That is the total revenue receipts, which is basically sum total of what? It is a sum total of the net tax revenue plus the total non-tax revenue. And the capital receipts is sum total of what? It is sum total of the debt receipts and the non-debt receipts. Okay, plus the drawdown balance. That is the total receipts. That is the equal to the total receipts. Now let us have a look at the expenditure side over here. So in the case of the expenditure side, we will be covering it as the non-planned expenditure and the planned expenditure. We will be covering it as non-planned expenditure and the planned expenditure. First of all, we will be covering the components related to the revenue expenditure. That is for the day-to-day expenses of the government departments. Okay, so interest payment or prepayment of the payment itself. It may be the case that the interest is to be paid, or it may be the case that the prepayment of the loan is to be paid. It may be the expenses related to day-to-day expenses we are talking about over here, related to defense, related to subsidies, or it may be the case grantees have been paid to the states or the union territory governments, or pensions have been paid, police expenses over there, or assistance to states from the National Calamity Contingency Funds. So if an assistance has been paid to the states from the NCCF, in that case also it is basically related to the revenue expenditure. And further the economic services or the other criteria mentioned over here, all these are related to what? All those are basically the types of the revenue expenditure. And we are covering it under what? We are covering it under the non-planned expenditure. This is not planned because these are not the schemes which have been formulated under the 5-year plan case. Okay, so that is why we have covered them under the non-planned expenditure. So we will be covering it into two parts. Expenditures into two parts. One, it is a non-planned expenditure. We will be covering the revenue expenditure and the capital expenditure in that particular thing. And further we will be covering the planned expenditure, in which we will be covering it again. That is the revenue expenditure and the capital expenditure under the planned expenditure. Okay, now let's have a look at the capital expenditure under the non-planned expenditure. So it may be related to defense or other non-planned capital outlay, loans to public enterprises, loans to state and UT governments, loans to foreign governments, it may be the case. So those are all related to capital expenditure, where you have invested the amount, either for the long terms, where we have invested the amount either for the long terms, or you have lent the amount for the long terms. Okay, and now let us have a look at the non-planned expenditure. It is sum total of revenue non-planned expenditure plus the capital non-planned expenditure. Now let us have a look at the planned expenditure itself. Further, it is classified into two parts, that is the revenue expenditure and the capital expenditure. Under the capital expenditure, revenue expenditure. So if there is a central plan, you have you have made the expenses related to that, but those expenses are for day-to-day purposes. That is for the working of the government itself. Then it will be covered under the revenue expenditure, and central assistance for the state and union territory plans. So that will be covered under the planned expenditure, and also the same components would be under the under the planned expenditure for the capital expenditure. So if it is for a short-term period, it is basically revenue expenditure. If it is for a longer period, it will be basically what? It will be the capital expenditure over here. Is that clear? So we can say the planned expenditure total is equal to revenue expenditure plus the capital expenditure, and the total expenditure is equal to total non-planned expenditure plus the total plan expenditure. So that is basically sum total of total expenditure and further the total receipts over there, total expenditure and total receipts over there. And financing of the fiscal deficit. What is basically fiscal deficit? So union budget is basically related to what? It is an outlay of whatsoever the revenues we will be having, and what will be related to future expenses. Okay, what will be the future revenues and what will be the future expenses? That is related to the budget itself. And further, if the difference is over there, let us take the case that your expenditures are exceeding the receipts. your expenditures are exceeding the receipt, in that case there is a deficit in between, there is a gap in between that is to be bridged out. In that case, that gap can be bridged out by the way of financing itself. Okay, and financing of fiscal deficit is equal to what? Debt receipt. So whatsoever the amount which we have received in the form of the debts plus drawdown of the cash balance, where we have drawn the balances in the form of the cash, that is basically what? That is basically your financing of the fiscal deficit. That means this particular part, that is the sum total of two terms. One, it is related to debt receipts, and the other one, it is a drawdown of the cash balances. These have been basically taken as the debt itself. Okay, these are related to financing of the fiscal deficit. Is that clear? Is that particular part clear over here? Next, it is related to deficit concepts. Next, it is related to the deficit concept over here. So let's consider this. First of all, it is related to revenue deficit. Whenever you say revenue deficit, like you cannot utilize particularly the long-term debt for the short-term periods. Even that is possible. I'm just giving you a concept related to it so as to understand the revenue deficit, that it is the excess of the revenue expenditure over the revenue receipts. Because for day-to-day working, your revenue receipts are going to scare of the revenue expenditures. Okay, so revenue deficit is basically what? It is basically the exceeding the if the revenue expenditures are exceeding the revenue receipts, it is basically the revenue deficit. It is basically related to revenue deficit. And whenever we say gross fiscal deficit, it means what? The total expenditure which is including all the terms, whether it is related to lending part, whether it is related to the net of the recoveries of our revenue expenditures, and further total and the non-debt receipts Okay, so if the gross fiscal deficit is the excess of total expenditure, is the exceed of total expenditure including the loans and for the net of recoveries and over the revenue receipts. That is basically what? That is your gross fiscal deficit. Okay, and when we say it is related to net fiscal deficit, it is difference between the gross fiscal deficit and the net lending So let me tell you a scenario over here. Let us take the case that you have receipts is equal to 100, and further you have lending of 20 rupees, where you have lent the amount to different it may be the case that you must have lent the amount to the states, or it may be the case that you have lent the amount to the other governments. Okay, and further you have receipts equal to 100 and you have spent 150 over here, Okay, so in the case of the gross fiscal deficit, if you consider, we are considering the total expenditure, including the loans, and further it is net of recoveries over the revenue receipts, whatsoever the revenue receipts were over there, whatsoever the external grants you have received, and whatsoever the non-debt receipts that you have received. And further, when you will be subtracting those from the total expenditure, that is a gross fiscal deficit. That will be the gross fiscal deficit. But over here, we never considered the lending part. But when we subtract the lending part from the gross fiscal deficit, that the amount that we have lent, okay, that will give us what? That will give us the net fiscal deficit. That is how we can calculate the net fiscal deficit. Is that clear? Is that particular part clear over here? And further, the gross primary deficit is related to, you must also have paid the interest on your borrowings. And when you subtract the interest payments from the gross fiscal deficit, that will give you gross primary deficit. Because the interest you paid, basically, it is not related to this particular financial year. It is related to those loans or those borrowings which were from the previous period. This is not basically related to this particular financial year. Let us take the case that the loan was taken in financial year 2018 and 19, and further per year an interest of 100 crore is to be paid. And moreover, in year 2020 and 2021, in year financial year 2020 and 2021, if we say the fiscal deficit, the gross fiscal deficit, it came out to be 3,000 crore. Now this particular gross fiscal deficit is considering also the interest part that has been paid. It is also considering the interest part which has been paid in the year 2021, but it is not related to the expenditure of this particular year. It is not related to the expenditure of this particular year. So we can say the gross primary deficit will be equal to gross fiscal deficit minus the interest payments. Minus the interest payment, that is your gross primary deficit. That is your gross primary deficit. And when we talk about the net primary deficit, it is basically difference between it is basically the net fiscal deficit minus the net interest payment. Okay, so that is your net primary deficit. That will be your net primary deficit. And for the net RBI credit to the central government, net RBI credit to the central government, what it would be? So kindly have a look over here. So net RBI credit to the central government is the sum of increase in Reserve Banks of India holding of treasury bills, Government of India dated securities, rupee coin, and for the loans and advances from the Reserve Bank to center. Loans and advances from the Reserve Bank to center. So those all will be considered related to what? Those all will be considered to the net RBI credit to the central government. Okay, so we know that as per the FRBM Act, we want to, there is a pronounced message over there that we want to reduce the fiscal deficit. We want to reduce the fiscal deficit, and further there must not be dependence upon the borrowings related to fiscal deficit. Okay, is that clear? Now for that particular purpose, if we need to locate that what amount has been borrowed by the government from the Reserve Bank of India itself, it is sum total of what? It is sum total of the increase in the Reserve Banks of India holdings. Increase in the Reserve Bank of India holding. I already told you that Reserve Bank of India is now not permitted so as to invest into the primary issues, but under the secondary market, Reserve Bank of India is free so as to purchase the government securities, treasury bills under the open market operations. Okay, now in that particular past, whatsoever the increases over there in the treasury bills, Government of India dated securities, rupee coin, which is also issued by the finance ministry itself, and further the loans and advances from the Reserve Bank, and that will be basically related to what? That will be related to net RBI credit to the central government. Net RBI credit to the central government. Is that clear? Further, we are going to cover a case study related to the union budget. So we are going to cover a case study related to the union budget. So kindly look at the case study carefully. So we are provided with the different data, whether it is related to the recoveries of loans and advances, whether it is related to the market loans, short-term borrowings, net external assistance. All the different factors have been provided over here. All the different components are given over here, and we need to solve the case study based upon it. So the first question of this case study says that calculate the total revenue receipts. So kindly do let me know at the earliest that what is the formula related to the total revenue receipts. The total revenue receipts are equal to the sum total of what? The total revenue receipts are equal to the sum total of what? So kindly please do answer at the earliest. So kindly please do answer at the earliest. What is the sum total of the total revenue receipts over here? So we need to answer what would be the total revenue receipt is equal to. So total revenue receipt is equal to the, it is basically comprising of two components now. It is basically comprising of two components. One, it is equal to total revenue receipts. If we look at it, one, it is a net tax revenue. One, it is a net tax revenue, and the other component, it is a total non-tax revenue. Other one, it is a total non-tax revenue, isn't it? So over here we are provided with what? We are provided with the both of the components. We are already provided with the net tax revenue, which is given to be 1500 in this particular case, plus the total non-tax revenue. The total non-tax revenue, which is given to be 5000 in this particular case, which is given to be 5000 in this particular case. So the total revenue receipts, these will be equal to 6500. So we can write it over here that the total revenue receipts is equal to what? It is equal to 6500, isn't it? Now let's move to the another question. Over here. Calculate the total capital receipts. We need to calculate the total capital receipts. So we already calculated the revenue receipts. Now we need to calculate the total revenue capital receipts. So kindly please do answer at the earliest. What would be the sum total of the capital receipts? And over here, Gohila Chandra has answered correctly at the earliest related to the question number 1. So what would be the sum total of the capital receipts? So in the case of the capital receipts, either we are having the non-debt receipts and further we are having the debt receipts. In the case of the total capital receipts, we are having the two components, whether it is related to the debt receipts or we are having the non-debt receipts. There are two components related to it. And what do you mean by the debt receipts? So whatsoever the amount which has been borrowed by the government itself from the market in the form of the market loans, or it may be some net external assistance over there, it may be the case of some short-term borrowings, it may be the case of the state provident fund. So whatsoever the amount which has been borrowed over there, that is related to what? We need to cover the capital receipts over there. We need to cover the capital receipts over there. So whatsoever the amount of the borrowing it is related to, it is related to what? It is related to the capital receipts. We are provided with the different components. So whether it is related to the recoveries from the loans, whether you have basically recovered from the loans and advances, but if there is recovery related to short-term borrowings, that is to be subtracted. If there is recovery from the short-term borrowings, that is to be subtracted over here. You need to keep this particular thing in mind. I already told you, when we talk about the debt receipts, it is related to what? It is related to the amount that you have received, for the amount that you have lent earlier. That is basically related to what? That is basically your debt receipt, na? That is related to your debt receipt. So recovery from the loans and advances. Loans and advances recovery for the long-term period. That is why we need to subtract the recovery for short-term period. That is this particular part over here. I am mentioning it as 1. So we will be subtracting 1 from here. And further that would be equal to what? And further we'll be writing it as a mixed capital receipts. That will be forming what? That will be forming your what? That will be forming the different components of it. Recovery from loans and advances, it is basically 1500 over here if you look at it. And further the 1 point, that is the recovery of short-term borrowings, that is equal to what? That is equal to 750. And further we need to add the miscellaneous capital receipts which are mentioned over here. Okay, so we are talking about the debt receipts only at this particular time. Miscellaneous capital receipts. So it will be basically what? It is given to be 700. So it is related to miscellaneous capital receipts over here. So it will be added up. So it will be equal to 1500 minus 750 is equal to 750 plus 700, that is equal to 1450. So debt receipt is equal to what? It is equal to 1450. Sorry, we are considering related to non-debt receipt, not related to debt receipt over here. I just write it different over here. So I was mentioning the concepts related to it. Related to the total capital receipt is having the two components. One, it is related to the capital receipt, and the other one, it is related to the non-debt receipt. One, it is related to non-debt receipt, and the other one, it is related to debt receipt. When we are talking about the non-debt receipt, it is comprising of the interest component that has been received. It is comprising of the interest component which has been received. Okay, so it will be interest on the loans and advances. So that is a recovery on loans and advances which is recovered, or we can simply write it over here, recovery. I'm just writing it again because I just mentioned, I just wrote wrongly over here above. So it is recovery from loans and advances. That is this particular part that I will be writing it as 2 number. So minus the 1 number over here, and further we'll be adding up the miscellaneous capital receipts that is related to the non-debt receipts. So your non-debt receipts are equal to what? It will be equal to the recoveries are amounting 1500 minus the recovery of short term, that is equal to 750, that is to be subtracted, and plus we'll be adding the miscellaneous capital receipts, that is equal to 700. So the sum total over here, it will be equal to 750 plus 700 is equal to 1450. So we can simply say that the non-debt receipts over here, it will be equal to what? It will be equal to 1450. It will be equal to 1450. And when we say about the debt receipt, what does it means actually? So whatsoever the amount which has been borrowed, from the market, it is equal to what? It is equal to the debt receipt itself. It is equal to the debt receipt itself. Okay, so whether it is related to market loans, or it is related to the short-term borrowings, or it is related to net external assistance, or it is related to the securities issues against the small savings. It is related to the securities issues against the small savings, or it is related to the state provident fund, or net other receipts. It is equal to what? It is basically related to the debt receipts over here. I'm basically describing the components over here again. I'm going to describe the components over here again. First of all, it is related to market loans over here, that is amounting 600, and further it is equal to the short-term borrowings, that is amounting 1000 over here. Further, it is related to the net external assistance, that is 400 over here, and plus it is equal to the state provident fund, that is amounting 500 over here. And further, it is related to securities issues against the small savings, that is amounting 450 over here. And further, it is related to the net other receipts. That is amounting 1000 over here. So these all components will be covered under the debt receipts over here. So what would be the sum total over here? Kindly please let me know the answer over here. So what would be the sum total? 600 plus 1000 is equal to 1600 plus 400, 2000, 2500 plus 1000, that is equal to 3500 plus 450, that is equal to 3950, that is equal to 39500. So the sum total over here is equal to 3950. Okay, that is related to your debt receipts. So your debt receipts are equal to 3950. So we were to calculate the capital receipts now, that is the sum total of non-debt receipts and the debt receipts. That is the sum total of the debt receipts and the non-debt receipts, that is equal to 3950 plus 1450, that is equal to 5400. So the total capital receipts are equal to 5400 over here. Okay, so that would be related to the question number 2 over here. That will be all related to question number 2 over here. So kindly let me know what is the issue related to it. So kindly please let me know what is the issue related to the lecture itself if you are unable to understand, so that I could repeat it again. I simply just told you that capital receipt is having the two components. We just covered the component above now. So there are two components related to capital receipt. One, it is related to the debt receipts, and the other one, it is related to non-debt receipts. In the case of the non-debt receipt, you are going to cover each and everything which is not forming the debt part, So we covered the two components related to it. In the case of the non-debt receipt, we basically covered two components. One, it was related to recovery that you have made. That was basically not the debt part now. That is not the debt part. You covered it under the non-debt receipt. And the second component that you covered, it was related to what? The second component that you covered. Can you please do let me know at the earliest? What was the second component that we covered over here? Just for your practice purposes, can you please let me know what was the second component over here that we covered? One, it was the recoveries of the loans and advances, and other was simply it was a miscellaneous capital receipts, isn't it? So we basically have a total over here. And further, I just told you that in the case of the recoveries of the loans and advances, the short-term borrowing recovery must not be considered. So that is to be subtracted. So we subtracted 750 out of it. So that is related to the non-debt receipts. And when we covered the debt receipts part over here, you must be remembering that I just told you that whatsoever the loan has been basically taken from the market, whether it is a market loan, whether it is short-term borrowing, net external assistance, provident fund, or the net other receipts, securities issues against the small savings, that is also to be considered. Okay. So that is related to question number 2 over here. Further, we will be covering the question number 3, that is the calculate the total receipts. Calculate the total receipts. So we need to calculate the total receipts over here. So kindly please do let me know the answer over here. What would be the amount of the total receipts? Kindly please do answer at the earliest. What will be the total receipts over here? So I just told you that the total receipts are having three components. The total receipts are having the three components. What are those three components? One, it is related to total revenue receipts, and other one, it is related to total capital receipts, and further it is related to the drawdown cash balance. Drawdown cash balance. Okay, so these are the three components. So these are the three components. So that will be the sum total of it. So the total revenue receipts is equal to 6,500 that we calculated, plus total capital receipt that will be calculated 5,400. Drawdown cash balances, it is given to be 1,500 over here. So just we need to add them up all, and that would be the answer related to it. And that would be the answer related to it. So what would be the answer over here? So the right answer over here, it is 6,900 plus 6,500. It is a 6,900 plus 6,500. So the right answer over here, it will be equal to 6,500 plus 5,400 plus 1,500, that is 13,400. So we do not need, we need to understand there are three terms in the case of the total receipts. So that is the catch part over here. So you need to remember that the drawdown cash balance is also to be added up to the total revenue receipt and the cash receipts over there. So that is all related to this particular case study, and further we will be covering another case study based upon the unit budget. So over here also we are provided with the different different data over here related to the different taxes, and we need to calculate. The first question, it says that we need to calculate the gross tax revenue. We need to calculate the gross tax revenue. So kindly please do answer at the earliest related to the gross tax revenue. So what would be the answer over here? So I just told you that we are having the 7 taxes which are to be considered. One, it is a corporate tax, other one, it is a income tax, other tax and duties, customs, union excise tax, service tax, and tax of union territories. Tax of union territories. These are the 7 tax that I just mentioned to you. So if we need to calculate the gross tax revenue, you need to cover only and only the tax revenue part. We need to cover only and only the tax revenue part. So what would be the answer related to it? So what would be the answer related to it? So we need to add them up all. So the corporate tax, it is given to be, so I'm just writing in shorthand, corporate tax, it is equal to 600, plus income tax is given to be 600 again, plus the other tax and duties, it is given to be, other tax and duties, it is given to be 250, customs, it is given to be 550, union excise tax, it is given to be 500, that is related to the that is related to what? That is related to the production tax, tax related to production. Service tax is basically covering all the GSTs and the VAT over here, that is 850 over here, and the tax of union territories, it is given to be 250 again. So what is the sum total of all these? So kindly do let me know at the earliest. What is the sum total of all these? So we need to calculate the gross tax revenue over here. So what would be the answer related to it? So what would be the answer related to it? So kindly please let me know the right answer over here. What would be the answer related to it? So it is a 600 plus 600 plus 250 plus 550 plus 500 plus 850 plus 250 over here. That is equal to 3600. That is equal to 3600. So what would be the answer over here? Kindly please jaldi se jaldi answer karna aapko. What would be the answer related over here? It is 3600 in this particular case. It is a 3600 in this particular case. Okay, so the right answer over here is a 3600. That is your gross tax revenue. I'm just writing it over here. That is a gross tax revenue, that is GTR. It comes out to be 3600. We may require it under the other questions. Okay, now let's move to the second question, which is related to that we need to calculate the net tax revenue. In the second question, we need to calculate the net tax revenue over here. We need to calculate the net tax revenue. I just told you that if we need to calculate the net tax revenue, it is basically equal to what? That we need to subtract, first of all, we will be calculating the gross tax revenue. And from the gross tax revenue, we will be subtracting the National Calamity Contingency Fund or duties, and further the state share. These two components are to be subtracted. These two components are to be subtracted. So GTR, it is 3600, and for the NCCD, the National Calamity Contingency Fund, it is given to be 300, and minus the state share, it is given to be 750 over here. So that is to be subtracted. That is to be subtracted in this particular case. So what would be the answer related to it? So what would be the answer? So it is 3600 minus 300 minus 750, that is equal to 2550. So we are having the net tax revenue as 2550. Okay. So over here 2550 would be the right answer. 2550 would be the right answer as per the question over here. So that would be all related to this particular case study. So this was a similar and further important case study related to a union budget, and that would be all related to union budget itself. I hope that you must have learned the concept related to it.